Before the video starts, I just wanted to say that nothing said in this video is financial advice. It's important that you do your own research and you don't just randomly buy into stocks. It's going to help you out a lot in the long term. This video should only be used as a starting spot for you to do your own research. So with that out of the way, let's get into it. In today's video, I'm going to be talking about my subjective opinions on if electric vehicles are currently in a bubble, what electric vehicle stocks I've personally bought and what stocks I'm considering buying, and my general ideas and thoughts on how to play the sector. At first glance, it appears that electric vehicles are in a bubble. JP Morgan has warned Tesla stock is dramatically overvalued along with many other banks. Peter Schiff has also said that electric vehicles are currently in a bubble, and even Elon Musk has said that his own stock price is overinflated. The current statistics for electric vehicles do look bubblish in nature. Tesla has a price-to-earnings ratio of 1,597, when the average price-to-earnings ratio is roughly 22 right now in the S&P 500, and generally undervalued companies have under a 15 price-to-earnings ratio. Tesla is also trading at 49 times its book value, and this similar stats can be seen with NIO. NIO has a negative price-to-earnings ratio because it has negative cash flows, and NIO is trading 58 times its book value. Both of these electric vehicle companies have very large market caps, with 90 billion and 752 billion, making them the first and the fifth most valuable automaker in the world. Despite this, neither of these companies are producing the most vehicles, with Volkswagen producing 10.8 million, Toyota producing 10.5, and so on. Tesla produces about, I think it was 500,000 in 2020, and NIO was about 50,000 in 2020. The charts show massive price changes this year for both NIO and Tesla, and it really looks like the bubble is about to burst. Emerging markets are generally characterized by stacks of companies, stacks of auto manufacturers, in this case, jumping into the emerging market and trying to profit off the electric vehicle trend. We know EVs are the future, every government wants it, therefore heaps of companies have jumped in. This is similar to back in the 1900s when tons of automobile companies jumped in because we knew cars were the future back then. However, this drastically decreased. I'm expecting a similar thing with electric vehicles, where all the companies we see today, a lot of them will go under, in my opinion. Companies like Workhorse are currently unprofitable and just popping off news and going down off news. Workhorse has risen 1,500% since late 2019, and I believe it had the highest price-to-earnings ratio out of all of the electric vehicle companies not too long ago. Nikola is another company that has seen a significant amount of investment off the electric vehicle wave. However, it's yet to sell a vehicle, and a lot of shareholders have beaten down the stock because of this news. Likewise, Blink is a company that earns $4 million annually, yet has a $2.2 billion market cap, which means the company is trading significantly above fair value at this current moment. Churchill Capital is also a company that is probably going to merge with Lucid Motors. However, we don't know if it will merge with Lucid Motors. This is unconfirmed news yet. And tons of people have still jumped on it and pushed the price up to $22 with a market cap of $5.8 billion, despite this being unconfirmed. Now, I agree it's probably going to happen with people on the Lucid Motors board being on the Churchill Capital board. It looks likely, but it's unconfirmed and it has still skyrocketed. Lucid Motors haven't even sold a vehicle yet, so it is quite surprising that this is happening. So this all comes down to, will the electric vehicle bubble burst? And I'm going to tell you why I don't think the electric vehicle bubble will burst. So the first point I want to make is that there really have been stacks of companies that have been overvalued in the past. For instance, Amazon had a PE ratio of 3,633, and then it stagnated around 1,000 for a while, and now it's at 94. This PE ratio is extraordinarily high, and it looks like it's a bubble that's about to burst. However, Amazon's share price has not once dropped significantly. In fact, it's risen at a steady rate over the years. This is very similar with companies like Facebook and Netflix, which also experienced overinflated PE ratios at the beginning. Now, the reason for this is because good companies should trade at a premium. In 2012, Amazon had the exact same market cap as NEO, roughly, which means it was already a massive company. It had a $100 billion market cap, and it was clearly a massive company. However, people expected massive things for Amazon in the future, just as they do NEO, just as they do Tesla, and Amazon delivered on that. Many people could see Amazon was going to deliver on that, just like Facebook, just like Netflix, just like Apple, and just like nearly every big company. Moreover, nobody is buying Tesla and NEO for what it's doing now. At least no long-term investors. Maybe if you're a short-term investor, you'll be riding waves with Tesla and NEO. However, if you're a long-term investor, you're looking at these for 5 to 10 years, and personally, I'm looking at them for even longer. I would say I'm even more bullish on electric vehicles in the long term than I am on stocks like Amazon, Netflix, and Facebook, and there's a range of reasons for this. There's growing subsidies for electric vehicles, there's growing demand for electric vehicles, there's legislature protecting electric vehicles, like in China, where they're mandating that 40% of cars must be electric by 2030. Falling prices will happen as companies get more efficient at producing electric vehicles, and they're technologically superior. The reason there's so much subsidies and supportive legislature for electric vehicles is because they will be better for the environment in the future. Joe Biden has rejoined the Paris Climate Agreement and wants things like electric vehicles to help reduce emissions. While currently it is, a significant drain to mine or to gather lithium for the electric vehicles, in the future these will be recycled and will end up being zero emission. Moreover, electric vehicles are clearly technologically superior to the internal combustion engine. Electric vehicles have autonomous driving in them, a range of features, and Elon Musk is even planning on releasing a robo-taxi network, which they'll start developing around 2025. This is an Uber-like model where basically there doesn't need to be a driver because it's fully autonomous. Things like this will bring in tons of cash for the companies and clearly are the future. Even as a side note, in the passenger seat of Elon Musk's Model S, you can even play Cyberpunk and The Witcher free. The future for electric vehicles looks bright. Norway just last year sold 54% of all new cars as electric vehicles. There's tons of countries adopting it, like South Korea, China, France, the USA, and there's a lot of potential for electric vehicles in the future. Just recently, Joe Biden has announced that the entire federal fleet, which has roughly 645,000 vehicles in it, will become completely electric. This news has resulted in stocks like Workhorse shooting up significantly, and is going to help the electric vehicle industry significantly going into the future. Now I want to dive into some specific stocks to do with electric vehicles. Tesla has had an insane growth rate over the years, producing 180,000 vehicles in Q4 of 2020 alone and 500,000 vehicles throughout the entire year. This is significant year-over-year growth of 61% for Q4 alone, and it is likely that this will continue into the future with an environment becoming more accommodative for electric vehicles. Tesla has great growth ahead of them, with 50% average annual growth expected for delivery vehicles. I think this is on the bearish side. It could be even more when electric vehicle mass adoption comes in around mid-2020s. As already stated, they're going to have an autonomous taxi network. Tesla has basically complete vertical integration where they don't need to outsource anything. They have the batteries, they have the solar panels, they have everything. And Tesla's more than just an electric vehicle company with Tesla Solar, Tesla Insurance, and tons of great things for this company. As you can see in the bottom corner, I've put Tesla near the bottom of the S-curve, and the S-curve basically shows how much growth Tesla's got ahead of it, and we're only just getting into that period of exponential growth. NIO is also an electric vehicle company that has a great growth runway ahead of it. 50% of vehicles sold in China are expected to be electric by 2035. This is great for NIO, as NIO is the current leader in China for electric vehicles and have had significant support from China. NIO is a company with a $100 billion market cap and is the most valuable electric vehicle company specifically in China. NIO has tons of competitive advantages like its battery as a service model and its amazing referral rate. NIO is considerably backed by China and has received a $1 billion bailout and a $1.5 billion loan from Chinese banks. Subsidies for NIO are currently going to extend up to 2022, and they'll probably go on for longer. According to research by Bloomberg, the number of electric vehicles could reach 10 million by 2030 and 20 million by 2040 in China, making NIO well positioned to capitalize on this. NIO has a fantastic balance sheet. In 2020, NIO had a current ratio of 2.4 with significantly more assets than liabilities. The debt to equity ratio is a little bit worse. However, the current ratio is very important and it shows how much cash NIO have on hand to help fund their operations. Just in 2019, NIO had a current ratio of below 1, showing they have less total current assets than they have total current liabilities. And that meant that NIO was quite a risky investment in 2019, but it shows how much support they've had in recent years to help get them off the ground and make them a massive electric vehicle company. It's also fair to be bullish on charging stations. Biden's charging plan means Biden wants to install 500,000 charging stations next year, and that looks likely to happen. The company best positioned to capitalize on this is Switchback Energy. Switchback is a SPAC which is merging with ChargePoint around the 11th of February. Switchback currently controls 73% of the North American market for charging stations. This means Switchback is well positioned to capitalize on a growing number of charging stations and positioned to continue to scale. Switchback believes that their growth will be directly proportional to EV growth. This is a great thing, as we know electric vehicle growth is going to continue into the future. So while it may seem like electric vehicles are in a bubble, this can be expected as emerging markets are bound to trade at a premium. Once e-commerce, technology, everything was a bubble. However, the market leaders in these specific industries have been able to deliver on expectations like Amazon, Facebook, Google, and Netflix. Personally, in the electric vehicle sector, I'm only going to pick the clear market leaders and be as safe as I possibly can, as I know Tesla and NIO and Switchback will do well into the future. Currently, I hold NIO, and I do not hold Tesla yet, as I'm planning on looking for a lower price before I get in, as I do feel like the price is slightly overinflated right now. Indeed, there is potential upside to companies like Lucid, Plug, Blink, all of those companies. However, I think they are too risky for me right at the moment, and as we've seen, many companies in these emerging markets will go under, so I don't want to play these smaller companies. I'm not saying it's a bad idea, I'm just saying it's inherently more risky. EVs have also proven to be very volatile so far, with a 20 to 30% correction across the sector, being quite likely, but also a 20 to 30% increase in the stock price being quite likely. We really don't know what's going to happen in the short term. That's why my investments for electric vehicles are going to all be long term, 5 to 10 years as a minimum. I do see companies like NIO hitting near $1 trillion market cap and Tesla hitting near a $5 trillion market cap in the next 10 to 15 years, and think these will be great long-term investments. Obviously, this is not financial advice, and you should do your own research before considering purchasing these electric vehicle stocks. So this was my first video on the channel. I'm sorry the quality wasn't as good as I would have liked it to have been. I haven't got a mic or anything just yet. I'll plan on getting those down the road. I'm also planning on doing specific deep dives into companies, like a 10-minute video on NIO, a 10-minute video on Tesla, and going into some other companies that I like Square and Tattooed Chef. If you'd like to see those, like and subscribe. Also, if there's anything you disagree with me about in this video, just write it down in the comments. And I'll see you guys in the next video.